Assalamualaikum and hello everyone, especially to our beloved lecturer. So, my name is Ahmad Shazombi Ahmad Tamizi and my other few group mates Farid Iskandar, Nurul Atira and also Misha Maisara will be presenting our INV555 assignment, which is the market and stock analysis. So, let's jump into the introduction part.
Assalamualaikum, my name is Farid Iskandar bin Fazli and I would like to present to you the introduction of the purpose of the study. The purpose of this study, market and stock analysis, is to identify the decisions to make whether it's buy or sell in the market based on the chosen stocks. To identify the stock is bias on the bullish side or in the bearish side. There are two course of actions that we can do to get the information we need to decide that. The first one is using the fundamental analysis or research. This type of action relies on data. The kinds of data that this analysis uses are financial statements, economic statistics, assets of the businesses, and etc. All of the data that we need to use in this fundamental research are easily obtained because it is publicly distributed by the company. To obtain the data, there are several ways to get it, which is we can see in the annual report. The annual report is in multiple websites such as Bursa Malaysia, the company's own website, or other investment websites in the web. The next course of action that we can do to decide whether to buy or sell of the chosen stock is by using the technical analysis. The technical analysis is to forecast the possibility of the market movement, and the technical analysis is based on past and current price. The chart shows a graphical representation of the trend of the stock at a period of time. The technical analysis has a variety of tools to decide on the market movement in the chart. The first one is support and resistance. The second one is indicators, volumes, price actions, patterns that we can memorize, and many more. To conclude, this purpose of study is that to ensure the strong decision we make whether buy or sell, it is influenced by these two analysis, which is the fundamental and technical, which is a strong reason for us to decide. Thank you. And now we will go into a brief introduction about the company that we have chosen. The first one is Ajinomoto Malaysia Berhad, which is a monosodium glutamate producer, which is one of the biggest one in Malaysia. Monosodium glutamate is MSG. If any of you do not know, and the company was founded in 1961 in Malaysia. The next one is Nestle Malaysia, a company that has been nourishing since 1912. That is in line with their purpose of enhancing the quality of life and contributing into a healthier future, as well as their promise of delivering good food and good life to all, which is their motto for the company. The third company that we have chosen is PBB Group. The PBB Group is a company that engages in food production, agriculture, waste management, and film distribution, and etc. The company was founded in 1968 as Perlis Plantation Berhad. That was the first name of PBB Group, and later changed its name by the decision making from Robert Kwok. The last company is MSM Malaysia Holdings Berhad. Was incorporated on 10 March 2011. A company that is leading in the refined sugar producer, was listed on Bursa Malaysia Securities on 28 June of 2011, and the market capitalization of Malaysia Holdings Berhad is 618.6 million. That is for the short and brief introduction of all the company that we have chosen.
Now we're going into the discussion part, which we're going to discuss about the overall market performance from the year of 2016 until the year of 2020. So let's jump into the year of 2016. The local stock exchange was tipped at 1,792.51 point for a brighter 2016. However, it lost their momentum to end of the year more than 50 points or 3.56% of the 2015 mark due to the global uncertainty. So what are the highlights of the year in 2016? There are four highlights that we can be discussed, which is the first one is the withdrawal of Britain from the European Union, also known as the Brexit. And the second one is the surprising victory of Donald Trump in the presidential election of the United States. And next one is the China slowing down their economy. And lastly is the economy, which is the soft oil prices and other external development that have influenced Bursa Malaysia and other global financial market. Now we're going into the year of 2017. Meanwhile, for 2017, FTSE Bursa Malaysia KLCI index closed their year at a 30-month peak, which is 1,796 points, and Malaysia's stock market continued to rise as the favorable fundamental for the economy and businesses. Our total volume grew from 2.64 billion share that worth 2.1 billion ringgit on the December 28, 2017, grow into 3.14 billion share that are worth 2.77 billion. What are the positive factors that influence the market in the year of 2017? So there are three things that we're going to tell, which is the high inflow of foreign fund, the higher oil costs, and also the firmer ringgit. Next one is the year of 2018. In the year of 2018, the market severely affected due to the blue chip stock dragged Bursa Malaysia to low in 2018. However, there are some other external factor which is the affected the Bursa Malaysia market in the year of 2018, which the first one is the US-China trade tension, the rising US Federal Reserve, which is Fed, the interest rate, and the last one is the geopolitical tension that occur in the year of 2018 within Malaysia. Next one is the year of 2019. The market performance for 2019 on the last trading day of 2019, the FBI lost its support. It is due to the US share overnight fall hit the Asian investor sentiment. What happened from this is the benchmark index of Bursa Malaysia KLCI, it lost 26.91 points or 1.67% to finish the year at its intraday low at 1,588.76 point. And this is due to the US and China signed the tentative trade agreement earlier month of the year 2019. And the last one is the year of 2020. The year of 2020 is a tough year, which is COVID-19 pandemic hitting the global equity market, and it have been affect the KLSI points, which is the record of 1,384.58. And looking back at this year of the 2020, on March 11, the KSI began its sharp decline, eventually plunging to a 11-year and 2020 low of 1,290.72 points on 19 March, one day after the order of movement control that took effect. Over the time from February 20 to April 7, this occurred due to the coronavirus crash, 2020 stock market crash. In the financial history, the crisis is the biggest downturn in the global capital market and the most disruptive crash since the 1999 Wall Street crash. The COVID-19 pandemic hit Bursa Malaysia market, which makes the end of the year of 2020 will be slipped 17.20 points to end the year at 1,627.21 as intraday low. That's all from me. Thank you.
Assalamualaikum. My name is Nurul Atira binti Muhammad Fadil and I will explain about industry analysis. The consumer product and service industry is under service sector. The service sector, which encompasses of subsector of wholesale and retail trade, food and beverage and accommodation, information and communication, transportation and storage, health, educational and art, entertainment and recreation, professional and real estate agent. For 2016, the total revenue of service sector is 375.3 billion ringgit. It increased by 8.3% compared to the previous year. The contribution to the revenue of service sector from wholesale and retail trade, food and beverage and accommodation is 298.2 billion ringgit. From information and communication and transportation and storage is 55 billion ringgit. From health, educational and art and entertainment and recreation is 14.4 billion ringgit. From professional and real estate agent is 7.8 billion. For 2017, the revenue of service sector is 399.7 billion. It increased by 8.5% compared to the year 2016. The contribution to the revenue of the service sector is from wholesale and retail trade, food and beverage and accommodation is 316.2 billion ringgit. From information and communication and transportation and showcase is 60 billion ringgit. From health, educational and art, entertainment and recreation is 15 billion ringgit. From professional and real estate agent is 8.5 billion ringgit. For 2018, the total revenue of service sector is 433.1 billion ringgit. It increased by 8.4% compared to the year 2017. The contribution of the revenue to the service sector is from wholesale and retail trade, food and beverage and accommodation is 342.7 billion ringgit. From the information and communication and transportation and storage is 64.7 billion ringgit. From health, educational and art, entertainment and recreation is 16.3 billion ringgit. From professional and real estate agent is 9.4 billion ringgit. For 2019, the total revenue of service sector is 459.4 billion ringgit. It increased by 6.1% compared to year 2018. The contribution to the revenue of service sector is from wholesale and retail trade, food and beverage and accommodation is 362.5 billion ringgit. From information and communication and transportation and storage is 69.1 billion ringgit. From health, educational and art, entertainment and recreation is 17.5 billion ringgit. From professional and real estate agent is 10.4 billion ringgit. For 2020, the total revenue of service sector until the third quarter is 428.3 billion. The contribution to the revenue of service sector from wholesale and retail trade, food and beverage and accommodation is 346 billion ringgit. From information and communication and transportation and storage is 59.9 billion ringgit. From health, educational and art, entertainment and recreation is 13.9 billion ringgit. From professional and real estate agent is 8.5 billion ringgit. This shows that the major contribution to the revenue of service sector is from wholesale and retail trade, food and beverage and accommodation. That's all.
Assalamualaikum warahmatullahi wabarakatuh, and I will be presenting on fundamental analysis. Based on the graph, it can be seen that Ajinomoto's ROA increased in 2017. In that year, it indicates that Ajinomoto able to generate earnings of 41 cents for every 1 ringgit investment on its assets. Nestlé's return on assets is slightly decreases in the year 2018 and it remained constant in the year 2019. While in 2020, its ROA is decreased to 19.65 and it indicates that the company able to generate earnings of 19 cents for every 1 ringgit of investment on its assets. While for PPB Holdings, its ROA is slightly increased in the year of 2017 and then it remained constant all the way to 2019. And in the year 2020, it indicates that the company is able to generate earnings of 54 cents for every 1 ringgit investment on its assets. As for MSM Malaysia's holding, the return on assets decreased in the year 2017 and in 2020, it indicates that the company is unable to generate earnings for every 1 ringgit investment on its assets. For ROE, return on equities, Ajinomoto's ROE is only 12.46 in 2020 while the previous year was 12.45 and 12.34 in 2019 and 2018 respectively. Nestlé's ROE is 64.44 in 2020 while the previous year was 101.1 and 100.71 in 2019 and 2018 respectively. PPB's return on equities is only 5.91 in 2020 while MSM's ROE is 10.42 in 2020. So it can be said that the performance of PPB and MSM are better than the previous year in terms of efficiency in using its total equities to generate revenue. If a company retains higher ROE, the common shareholders will only realize this gain by having an appreciated stock. The figure shows that EPS for Ajinomoto reached its highest earnings per share in 2020, which is 98 cents. and the lowest was in 2017 with the earnings of 31 cent per share. The company that has high earning per share (EPS) is capable of generating a significant dividend for investors, and it able to flow the extra profit towards the company capital to ensure more financial stabilities and can grow even bigger in the future because of high capital that can be generated. Nestle's earning per share increased from 2016 to 2020. The earnings per share then increased from the year 2016 to 2020 with EPS of 27 cents, and the highest EPS for Nestle amongst the 5 years is in 2020 with EPS of 59 cents. As for PPB Group, the highest EPS is in the year of 2020 with the value of 82 cents, whereas the lowest EPS is in the year 2017 with the amount of 69 cents. MSM Malaysia's holding earnings per share decreased in the year 2016 and 2017 with the value of 70 cents and negative 5 cents respectively. 2017 was the lowest earnings per shares for the company amongst the 5 years in the value of negative 5 cents. To conclude, Ajinomoto has the best EPS in the year 2020 compared to other companies. Dividend per share is translating to total common dividends paid by a company into per share. And overall performance of Ajinomoto, Nestle and PPB are active as it is increasing steadily from 2016 to 2020 compared to MSM. This shows that the firms have the ability to pay consistent dividend to its shareholders. For Nestle, the graph depicts that it has a steady increase over the years with its lowest in 2016 and 2017 at RM2.70 and the highest is in 2019 and 2020 at RM2.80 per share. However, for PPB, there is not much change in the dividend per share. The highest DPS is 31 cents in 2020 and its lowest is 21 cents in 2017. MSM shows a stagnant dividend per share to its shareholder as it is uneven and not consistent. The increasing of profit to the firms also affecting the factors of payment of dividend. In a nutshell, Nestle has the highest common dividend paid by the company per share compared to Ajinomoto, PPB and MSM. Dividend payout ratio is to measure the earning that company pays out to stockholder in the form of dividend. Dividend is also one of the main fundamental indicator which show how great are the financial stability of the company due to capabilities to pay their stockholder dividend as for investor analysis for greater or an existed of dividend payout to stockholder. This indicate the company has great financial health. For Ajinomoto, the highest is in 2016 with 50.31% and its lowest is in 2018 with 48%. In 2020, the dividend payout ratio for this company is slightly increased. Nestle's dividend payout ratio increased from the year 2013 to the year 2015. In 2016, it is slightly dropped to 99% and it increases back to 99% in the year of 2017. As for PPB Group, the dividend payout ratio increased from the year 2013 and 2014 and reached the highest amongst the 5 years in 2014 with DPR of 31%. The DPR for this company then dropped to 26% in the year 2015 and increased back to 28% in 2016. MSM Malaysia Holdings (DPR) last paid is on year 2016. To conclude, Nestle is the most efficient in paying stockholders dividend compared to other two companies. Dividend yield in the dividend per share divided by price per share. It is also a company's total annual dividend payment by the market capitalization, assuming the number of shares is constant. It is often expressed as a percentage. It shows that the firms had ability in managing the performances of the company. The increasing of rates makes investors more confident to invest to the company in the future. For Ajinomoto, the highest dividend yields at 3% in 2019 and its lowest is in 2018 with 2.40%. Nestle's highest dividend yield is at 3% in 2016 and its lowest is in 2019 with 1.90%. While PBB indicates a stagnant dividend yield throughout the years, it reached the highest in 2020 and gradually decreasing and reached its lowest in 2017 in dividend yield of 1.47%. However, MSM dividend yield in 2020 is 0% and which is their lowest and managed to give a high dividend of 4.75% in 2016. In conclusion, Ajinomoto and Nestle have the ability in managing companies' performance. Book value per share is ratio that measured the company owner's wealth. As in for the graph, Ajinomoto scored the highest among the competitors. This clearly shows how the company's vision to increase their stockholders' wealth is fully fulfilled. As for other companies like Nestle and MSM is fulfilling the company's vision, which is increasing the owner's wealth but in the lower rate than PPB Berhad.
So for now, we will go into the technical analysis part of this presentation. And as a general information, I would like to tell you is that all the tools that we use to analysis are support resistance, trend line, stochastic, relative strength index, and moving averages. So the Ajinomoto's technical analysis is that in 2019 until March 2020, it is in a downtrend structure. Afterwards, it moved into a trend structure. Looking into the current price, it shows us that before this, it entered the support become resistance zone, and it is approaching the minor support and the trend line, which is the yellow line, and the small box. The small box is minor support. We forecast that the price will enter the minor support zone and touch the trend line before moving upwards. Looking at the indicators, which is the moving average, the moving average and the current price, the moving average line and the current price are near to each other. And looking at the current price, it looks like it wants to cross upwards of the moving average line. And looking into the stochastic and the RSI, it shows us that both of the indicators are at the 20% line. That means the stock is oversold and there is a buying signal, which is all of our tools are showing us a buying signal. It means it is strong. It is a strong signal, and we'll look into the stock to get into the position of the stock at a bullish side. Next is the Nestle technical analysis. The Nestle technical analysis, you can see clearly it is a consolidation period. The consolidation period has a resistance and a support, and if we want to gain or take an opportunity, we can use the support zone as um, as a zone for us to get into the position. But as you can see, the current price right now, it just touched the major support of the consolidation period, and now it is playing in the minor resistance and minor support. Looking at the moving average, the moving average time is above the current price. That means it is a sell signal for now. Looking at the RSI and stochastic, the stochastic shows that it is in the oversold area, and the RSI shows us that it is in the 50%, which means it is not biased on selling or buying. And for the safety of our money, we should not enter a position at this stock, because it is in a consolidation period and all of our tools is not showing any strong signal. Looking at the PBB group, which is also in the consolidation period, but the consolidation period is quite clear than the Nestle consolidation period. As you can see, the current price is in the resistance zone. That means we would expect the price to go down into the support zone next. Looking at the moving average line, it is below the current price. That means it's showing us a buying signal, but it doesn't correlate with the current price being in the resistance zone. Next, the RSI shows to us that it is in the 60% line, 60%, which means it is not strongly overbought. Looking at the stochastic indicator, it's showing us that it is in the 75% line, which means it is in the overbought zone, which means there is a strong selling signal. To get into a position of this stock, we suggest that we would wait at the support zone, and we would take the opportunity to gain something when it bounced from the support zone towards the resistance. For now, we will wait for the current price to go into the support zone first. The MSM Holdings technical analysis is also in a consolidation period. It is quite likely as the Nestle consolidation period, which is not that clear. There is a resistance of the consolidation and the support of the consolidation. The price just went to the support, so now we would predict it would go to the resistance. Looking at the moving average line, it is below the current price, and the current price just crossed over the moving average line, which means that is a buying signal. And we can see that if we put the support and resistance at 100% of movement, we can see that the current price is in the middle of the support and the resistance between them. Means that we have maybe another 40% to reach the resistance line, and we can gain something from that. Looking at the stochastic shows us that it is it just went into the oversold and now it's going up. The RSI shows us that it is at the 50% line, which means there is no bias on selling or buying. But if we look at the moving average, the stochastic, it relates to each other, which showing a buying signal. If you want to take the position, you can, but we do not recommend it, because in the consolidation period, it is unpredictable. Unless it breaks the resistance of the consolidation.
For recommendation based on fundamental analysis, we're gonna be looking at 2 stock out of 4, which is the Nestle and also Ajinomoto. Nestle is the most perform in terms of most of the ratio. As we calculated all the ratio we used to measure the performance of the company, Nestle ranked the highest or the best among the companies, meanwhile Ajinomoto is second. We found that Nestle is the most performing in terms of return on asset, return on equity, dividend per share, dividend payout ratio from the year of 2016 until 2020 than other companies. So what does this indicate? This indicate Nestle are efficient in deploying their assets to generate profit, and the company ability to earn return on its equity investment for those years are good. In addition, Nestle some of declared dividend per share average of 2.70 cents or 2 ringgit and 70 cents to 2 ringgit 80 cents for investor could be the main traction for investor. However, as we know, Nestle share price is quite expensive, so we found another alternative stock that could be a recommendation for a smaller investor who doesn't have big capital. We recommend Ajinomoto as the second alternative or the other alternative than Nestle. It is because Ajinomoto is the closest rival to Nestle, which has a close amount of value in the most of the ratio and ranked second for almost all the ratio, which have the potential to be invested. So that's all. Thank you.
Next, for the recommendation of the technical analysis, the most positive focus outcome is obviously Ajinomoto, because it is in an uptrend and all the tools are showing a strong buying signal, and that means that between all of the stocks, the three of the stocks, which is MSM, PBB and Nestle, are in consolidation period. We cannot get into a position of that stock unless it breaks the consolidation resistance, the resistance of the consolidation. And that is all in the recommendation of the technical analysis. Thank you.